Hello, everybody. Welcome to the 21Shares webinar. We are very thrilled and honored to have you. Thank you so much for your time. But equally, thank you so much to my wonderful colleagues at 21Shares from capital markets team and the investment management team. We got Michael as well as Bart. They can introduce themselves, of course, but we're going to give you guys 30 more seconds to be more comfortable. Start with introductions and then walk you through our fantastic call today. How are you guys doing today? Michael, Bart, I'm sure it's a very busy day with the market volatility and turmoil.
These are the fun days for which we all wake up in the morning.
Absolutely.
Wonderful. All right, let's get started. So thank you so much, guys. I'm Ellie, running strategy and business development at 21Shares. Bart, Michael, and I we're all based in New York City. We have Bart, our head of portfolio management, and Michael, our capital market specialist. Do you guys want to give a 30-second introductions about yourselves? And then we get started with the agenda of the call.
Absolutely. Go for it, Michael.
Sure. Yeah. So I lead the U.S. capital markets effort here at 21Shares. Have been here for about 8 months and have been in the crypto space for the last about 3 years now. So excited to be here with you all and chat about markets.
Awesome. Good afternoon, everyone. I'm Bart Mihalchuk. I am the head of portfolio management for the U.S. business at 21Shares. I've been in crypto full-time for the past 7 years and super excited to dive right in.
We're very excited to have you guys, very excited to have your brilliant minds. I think today has been a watershed moment for the global markets. Crypto is equally a macro asset as well. It cannot live without geopolitics and macroeconomics. So I think it's good that we start with the global macro environment as the first part, and then we're going to dive into the crypto specifics and some of the ramifications that we've seen across Bitcoin and Ether and the global crypto markets. And then last but not least, our expectation for the near future and what this entails for the crypto asset industry. So Bart, on the macro environment, can you walk us through what you've seen so far in the last week or so, but especially over the last 48 hours? We've seen a lot on the macro level, especially in the US and Japan, as well as some of the potential escalations in the Middle East. But give us a quick update and I think a good summary of what we've seen so far across the board.
Sure, happy to kind of set the stage here. So I would say if we kind of go back a little bit further, even macro data globally has been weakening over the past 3 months. And I think the Citi Economic Surprises Index bears that out quite nicely. We've gone from +30 to -30 in that specific index, highlighting the fact that economic numbers relative to expectations have been a bit weak. However, they have not been horrible. In fact, we've seen really strong GDP growth in the US, especially over the past 3 quarters. However, the numbers have been somewhat below expectations. As a result of sort of underwhelming economic data, the markets have started to price in rate cuts across the large economies. In fact, we've already seen central banks act on this. BOE cut rates in June. Bank of Canada has done the same, and the markets have started to price in rate cuts in the US as well. However, the Bank of Japan decided to take the opposite approach and surprisingly increased rates last week. And this, of course, sort of kicked off the unwinding of the yen carry trade over the past couple of days, which has caused some pain in the markets. I think overall, I would summarize the past 2 days as a fundamental unwinding of financial positions rather than an economic shock. Having said that, financial shocks can sometimes sort of move into the real economy, although those events tend to be quite rare, and we certainly don't expect that to occur this time. In fact, this morning, the ISM services number was quite positive. Markets have already stabilized. Bitcoin is up, I think, 10% since the lows we've seen this morning. So I don't want to convey the picture that we're kind of out of the woods yet, but certainly the markets are already beginning to heal.
And what about in Japan? What do you expect in Japan right now, given the unwinding of the yen carry trade, but also the fact that they actually hiked the interest rates amidst the economy that is still weak for now?
Yeah, so prior to the past 2 weeks, the yen has been on a 2 or 3 year course during which it has weakened quite a bit against the dollar. As a result of this, the BOJ has been concerned about inflation. And I would say hiked rates kind of stem that tide, stem the potential for future inflation to expand. I think the BOJ is set potentially on hiking rates, although I think my hope and everyone who participates in markets hope is that their sort of forecast for hikes over the next 6 months are going to be reduced. But again, for the BOJ, this has really been about ensuring that the yen doesn't weaken from the rates we've seen in July. And of course, already the yen has responded by strengthening quite a bit over the past couple of weeks. And so we'll see what they do, but I would imagine whatever plans they had last week have changed quite a bit given what has happened in Japanese equity markets and given what has happened in the yen-US dollar cross as well over the past 48 hours.
Fantastic. And Michael, on the global flows that we see, especially in the US capital markets and more globally, what has been the impact, especially amidst the drawdowns in the equity markets, literally triggered by multiple events that we've seen, as we discussed with Bart?
Yeah, no, absolutely. So I think what we've noticed is the trade on small caps that kind of began probably 3 to 4 weeks ago has begun to unwind again. That being said, year-to-date flows into index funds, primarily S&P 500 index funds, have continued to kind of outpace the growth that they've seen in recent years. I think we've seen over 60 billion in net inflows into S&P 500 funds since the start of the year. I kind of expect that to continue. But I guess it's to be seen through the rest of the year.
Agreed. What do you think about the U.S. Treasuries funds as well as the REITs? Because we've seen some rotations from the equity market to more of these dividend-bearing assets. Do you think that this is a trend that we're going to see, especially amidst the fact that we don't know yet until we know if the Fed is going to cut rates in September, actually, or even double cut moving forward for the rest of the year?
Yeah, I think that's to be seen. I think flows into bond funds will be stemmed through the rest of the year. The expectation is the Fed cuts rates more than expected. I think right now we're seeing by the CME FedWatch tool that it's now an 85% chance of a 50 bit cut or more in September. I think it's kind of a wait and see at the moment on whether we're going to see that rotation into bond funds continue or if we're going to start to see bonds sell off and risk on happen again.
Yeah, that makes a lot of sense. What about the geopolitical tensions that we see in the Middle East and the impact on commodities like gold? We know that gold is usually a safe haven, but we've seen over the past, 7-10 years, some of the crises that we experienced, especially the one 4 years ago from the COVID-19 market crash. Clearly, gold also tanked amidst the soared volatility and correlation with the equity market, including crypto assets as well. So what do you expect for gold until we are proven wrong that in the short run, we could see actually more allocation into such products and then probably down the line, Bitcoin and Ether?
Yeah, so I think it's hard to say. I mean, gold is obviously seen as a safe haven asset, very similar kind of thesis to Bitcoin. It's hard to say for certain exactly which way this is going to go. They both have rallied significantly this year. I think Bitcoin is up somewhere around 40% this year alone. So again, I think we're in a wait and see mode here and continue to watch kind of what the Fed does next in September.
Absolutely.
Just to add a few thoughts to that, when markets move lower quickly, investors and traders tend to raise cash as fast as they can. And so even though one would have expected gold to be up today, given what has happened in the markets, it's gone down because the focus right now is on raising cash. Once we're past this event, I think gold will likely continue to go up higher as it has been over the past 6 months to a year.
No, I agree. And I think it's a good segue to the impact on the crypto markets. Maybe, Michael and Bart, you guys can tag team on what we've seen so far for the past 7 days. As a run through for the audience, we saw the VIX, so the volatility and S&P 500 index, looking at the options rate on the S&P 500, rising to levels that we haven't seen up until March 2020 when we had the COVID-19 market crash. So clearly there is uncertainty in the market today, measured by the VIX, but also that escalated to the crypto market, although we've seen a rebound in prices really quickly, very similar pattern that we've seen as well with the COVID-19 market crash, where within a few hours up to a day, we've seen the price of Bitcoin rising from $5,000 to then $7,000 quite quickly as long-term investors piled in. But can you guys give us a more like a quick summary on what we've seen in the crypto market, especially with the liquidations on the futures markets?
Sure. Fundamentally, Bitcoin today is still a macro asset. Although to date, correlations between Bitcoin and the NASDAQ, Bitcoin and the S&P have been lower in response to the anomalous event we have seen today. As I said earlier, investors will tend to focus on raising cash. And so in response, along with gold and along with equities, Bitcoin has sold off quite strongly. I think the more interesting question to focus on is what happens next when we are past this event. My expectation is that once investors refocus on fundamental value, once they refocus on the tail of events that Bitcoin has as part of its narrative for the 6 months going 6 months forward, things will reset and we'll see investors allocating back into what I think should be thought of as safe haven assets.
Absolutely. What about you, Michael?
Yeah, I think this single move up in the VIX was a bit overdone, and I think we've seen that today. A lot of losses have already been paired through kind of halfway through the trading day. The VIX from its peak today is already down 50% from that point. It's trading closer to about 35. So I think a bit of the selling was overdone early this morning, and kind of continue to see as people digest kind of the information coming in.
What about the flows in some of these, crypto exchange-traded funds and exchange-traded products more globally? Because it's a global phenomenon for the underlying asset, but also this year it has been a watershed moment for the industry to have Bitcoin and Ether in the U.S. financial system. What are you seeing so far for these products?
Yeah, no, absolutely. I think it's important to zoom out here and kind of look over the year-to-date basis since these products launched in January, at least in the case of the Bitcoin ETFs. We've seen over $17.5 billion flow in net inflows into these funds since the beginning of the year, which is astonishing, right? That's a record number, especially for a new asset class and first 8 months of launch. I think the timing of the ETH ETFs as well, obviously it was summer, kind of midsummer quieter, but we've still seen a positive growth in those, even with the kind of the outflows that have come. So yeah, I think it's still very early for these funds, but I think what we've seen is historic up to this point.
Absolutely. I think the audience may have questions around these ETFs and also the underlying asset. And I think it's a good segue to more broadly discussing about the Bitcoin and Ether sell-off. Although the market rebounds, I think it's really important to highlight to you guys that there is a study that our wonderful research team put together earlier this year to look back at the daily drawdowns for the past 10 years for Bitcoin. And what they discovered was that for the past 10 years, drawdowns of more than 10% within a day happened only twice. And that means within 10 years that you have a chance of twice as much to actually get these kind of drawdowns on a 10-year basis. So that means that once every 5 years, you may be expecting a drawdown of more than 20% just on a statistically basis. And regarding the drawdowns of more than 10% within 10 years, they happen only 43 times, meaning that for the next 10 years, investors may be expecting a drawdown of more than 10% within a day, once a quarter. So every quarter you may be expecting that, and that's exactly what happened. Although today is statistically important, the context is actually quite different from the past 4 years and the past 10 years, of course. The asset class has grown significantly bigger than before. It's an asset class of over $2 trillion in total value. Bitcoin is a $1 trillion asset class with a 53% dominance across the crypto markets. But What is really interesting compared to the past drawdowns that we've seen for the past 10 years is that every single time that we have a drawdown of more than 10%, the investors that bought Bitcoin for the past 6 to 12 months at that time, so today or even 4 years ago during the COVID-19 market crash, all of them were actually the major selling pressure when we look at the blockchain data. The beauty with the blockchain data and with our specialists at 21Shares is that we are able to aggregate all of these data sets and make sense in a very easy and understandable manner for you guys, meaning that you're able to see the age of the different wallet addresses that are not associated with crypto exchanges, associated with major institutions, but simply the wallet addresses of individuals and other type of investors. And I think what is interesting here is that the long-term investors haven't actually moved to sell their crypto assets and move the coins to exchanges to sell on the open market. They actually piled in to have access to a relatively lower valuation that they actually had access to, for example, over the last 4 to 5 months. So this is really positive when we look at the existing data sets. So clearly, this is coming from investors that may not have a long-term and strong thesis on the asset class, which is oftentimes the case. This is exactly what happened during the COVID-19 market crash or in 2017 and 2015 as well. And I covered this asset class for the past 10 years myself, so it's not surprising. The last thing, as Bart mentioned as well, is also the correlation. This is not an all-time high compared to what we've seen with the FTX collapse or the Terra Luna collapse over the past couple of years. Clearly, this is still relatively mid-level compared to some of the crises that we experienced in the past. So this is really positive and a silver lining for the asset class. So we talk about Bitcoin. Bitcoin is half of the asset class, but there is also Ether, the second largest. So when it comes to Ether, so Ether has experienced a drawdown of 21% over the past 24 hours. It's probably less than that now, given that the market rebounded. However, it's important to note that within crypto, we've seen some rumors around a major market maker potentially selling some of their crypto assets, especially Ether, on the open market. The good thing, as I mentioned previously, is that with blockchain technology, we can actually verify and analyze all of these different wallet addresses associated with institutions. And the good thing is that we were able to identify them. You have access also to these data on a publicly basis and for free as well. So after this call, you're going to get all the links. But you can see that there was about $300 million worth of Ether sold over the past few weeks on the open market, which triggered a significant selling pressure. But also bear in mind that the drawdown that we experience today is very similar to the drawdown that the market experienced during the China ban in 2021, when the Chinese government decided to completely ban Bitcoin mining and Bitcoin trading in the country. So this is of a significant magnificence. But what you really have to remember here is that the fundamentals of crypto assets are very strong, which we're going to really talk about. But if there is anything that Bart and Michael, you guys want to cover on Bitcoin and Ether, especially on the flows or any other market sentiment items that we haven't covered?
I would think that going forward for Bitcoin, especially, the positive tailwind from the halving will continue to be a story. Certainly, on the ETH side of things, on-chain activity has been strong, and I would think that is also going to continue to be a story over the next 6 months. And beyond that, whatever the result of the election in the US is, I think we all expect a positive or a more friendly approach towards the crypto industry in the US, which to me all adds up towards positive tailwinds for the asset class going forward.
I couldn't agree more. Michael, what about you?
Yeah, I think I totally agree. I mean, I think there's a lot still yet to be done this year, especially on the Ethereum network. I know they've planned upgrades for account abstraction and a lot of new features that will allow blockchain technology to be more accessible to the masses. So I totally agree. I think there's still a lot of tailwinds here that kind of can lead to robust growth in the asset class.
I agree, and also this market drawdown has pretty much nothing to do with the underlying fundamentals of the blockchain technology itself. There is absolutely no issues with the transaction process on the Bitcoin and Ether network. They're actually working as expected. Same, of course, for most of these crypto ETFs. So this is business as usual. Of course, there will be market movements, but when we look at the fundamentals, especially for Bitcoin, one of the key metric for investors to remember is how secure is the network, because there are key variables to always consider when it comes to the investment case for Bitcoin, which is A, the security of the network, and B, making sure that on the back of the security of the network, the value of Bitcoin itself will remain the same, meaning that there is a limit in the number of Bitcoins that could be emitted over the next 100 years. And that's why there is a 21 million limit of the number of Bitcoins for the mining process to be able to emit new Bitcoins there. So if the network is not secure enough and there is a risk of for example, reversing some of the transactions or even attacking the governance of the network, then of course the value of the assets would be in danger. And again, looking at the fundamentals of Bitcoin, the security measures of Bitcoin, which is called the hash rate, so the computing power emitted to control the emission of the Bitcoin network to ensure that this is decentralized and accessible to everybody. Clearly, this is an all-time high, meaning that there is enough computing power from the different miners and administrators of the network to secure the Bitcoin network in a rapid way with specialized computers called ASICs. So these are the things that we are looking into. Bitcoin and Ethereum are very different from one another. Bitcoin is an emerging store of value. Emerging store of value meaning that this is an asset very similar to gold in your alternative suites, but Bitcoin is 1/10 of the global value of gold. Bitcoin is less liquid and less volatile, or more volatile than gold. But at the same time, what is really important here to remember is that Ethereum is a global app store, so very different from Bitcoin. Ethereum is similar to what you have on your iPhone or your Samsung to have an easy access to web-based or mobile-based applications. So these are different use cases, and that's why 21Shares, we invented the global classification standard similar to GICS, so that we can apply the same principles and values to the GICS, to the stock markets, to ensure that we can actually help the investors understanding that this is a burgeoning asset class with various use cases that you can easily understand to appreciate the emerging sectors and industries within the crypto asset industry, similar to the SaaS industry or any other industries that we have within the stock markets. So same for Ethereum, very different security measures. Bitcoin is with computers, with proof of work, and Ethereum is with proof of stake to enable the investors to come in with capital and secure the network instead of using computers. Same with Ethereum, we're seeing a rising number of capital allocated into staking, so securing the network at an all-time high, close to 30% of the total supply of the Ethereum network, while at the same time, the request to withdraw assets from the Ethereum network is actually very small today. I think it's actually less than 5% of the total supply of Ether at about 18K Ether. So this is significant. Again, it shows that this is an asset that can weather storm and weather, of course, market stress. So this is business as usual. There is absolutely no issues within the underlying technology. We're seeing multiple institutions leveraging blockchain technology for tokenization, or even like fintech companies like PayPal and MasterCard and Visa leveraging different blockchains like Ether to tokenize multiple assets, even like fiat currencies like the dollar or the euro. So clearly the asset class is evolving quite rapidly, so investors should not be concerned over what is happening behind the scenes, especially looking at the fundamentals. For the audience, if you're curious about understanding the financial statements of Bitcoin and Ether, we have real-time financial statements for free as well, so that you can actually look at the key metrics, the number of users, the number of miners, and the returns over time, and all the key indicators that really matters to you. So without now further ado, we're moving on to the last section of our presentation where we're going to talk about the expectations of the market. We can start at the macro level, talking about ETFs, and then, of course, the underlying assets. So maybe, Bart, you want to start? What are your top two expectations moving forward in the near future?
Sure. So as I mentioned a few times on this call, what we have seen over the past few days has been a fundamental markets positioning event. These events rarely spill over to the real economy. If they do, the good news is that central banks around the globe actually have a fair bit of room to cut rates to support and stimulate economies. So that's point one. Point number two is that volatility tends to cluster. So I do expect that in the near term, we'll continue to see quite volatile price action. Over time, this will subside. I think those are my top two expectations.
What about you, Michael?
Yeah, no, absolutely agree. And I think one thing too to expect here is kind of continued increased volume across the ETFs. And it's definitely something that we've seen today, right? They're trading at 200% of their 20-day average. But yeah, I think this is really an isolated event, right? I think we had kind of a bunch of catalysts occur within a short span that kind of led to this ongoing volatility here. But remain optimistic on kind of the market conditions and economic growth kind of going forward.
And what about the counterparties trading these ETFs? Anything that you guys can share and shed the light on that is publicly accessible for the audience and they may not know? Any like brokerage firms or counterparties that you think have had any issues, or actually was business as usual today despite the market turmoil? Like what happened behind the scenes, if you can share?
Yeah, no, absolutely. I think it was very much business as usual. The ETFs are operating as intended. I think as what we would expect, the spreads widened a bit towards the open. We didn't see any trading halts across any of the ETFs. So that was a good sign that these were trading in a kind of healthy environment. And again, we've seen increased volume on them, but spreads have returned back towards normal. And these are really, they're functioning as intended. So we're quite happy with the way things have gone today.
Yes, absolutely. Although markets appear stressed, our counterparties and trading partners are business as usual. We haven't seen any issues today, and we haven't heard of any issues occurring as well.
This is awesome because we've seen multiple trading platforms mentioning that they were running into issues. They had to actually halt the trades. But this is fantastic to see that actually the ETFs were working as intended, and most of the market participants were able to access very easily this asset class. This is great.
That's a very good point. From time to time, crypto exchanges during days like this tend to go down, and we actually did not see that. That's a very good point.
This is wonderful. Great. We have a question from the audience. So Arno, very, very, very much thank you for spending time here and coming into the webinar with us. So you have a question on the correlation of Ether. So why do you think the ETH correlation with the S&P 500 is higher than Bitcoin? Bart, you want to take that one away?
I'm not sure if I have a good explanation for that. I think Bitcoin and ETH are highly correlated together. And as a result, they're both tend to sort of follow similar patterns in terms of correlation to the underlying asset. I wonder how far back those numbers that we showed today on the slides actually go back. I would bet that over the long term, those numbers are actually quite similar.
I think it's good as well that this question refers really well with our invention on GCCS to actually differentiate crypto assets. I think it's actually quite not surprising to see that Ether may have actually a higher correlation given the fact that it's more of a tech play. It's a global platform for applications and entrepreneurs to actually launch their own companies with a blockchain infrastructure than using Web2 Rails. So it's not really surprising, especially at the maturity level that Ether has compared to Bitcoin. Ether actually turned 9 years, I think, a couple of days ago. So Bitcoin is a 15-year-old asset class. So clearly, there is a lot more volatility and correlation with the equity market for Ether. So that may explain that. But also, I would say that there are some similarities sometimes for over crypto assets with Ethereum, but clearly Ethereum is the market leader when it comes to smart contracts and tokenization and of course all the over innovation that we see around global app stores. About 60% of the market share really comes from Ethereum when it comes to tokenizing dollars with stablecoins, tokenizing real world assets like equities, real estate, but also we've seen U.S. government bonds. So clearly there is an asset that really is a tech play compared to Bitcoin, which could be both a risk on and a risk off asset. So that may explain that too. But that's a fantastic question, Arno. Maybe Michael, you want to add more to this?
Yeah, I think I totally agree with what you're saying, Ellie. Obviously, Ethereum's use case and purpose is obviously quite different than Bitcoin's, serving as a global app store and kind of an infrastructure layer for settling transactions. So I think, right, that correlation is probably more like as you're seeing different applications built on top of it, and it's a collection of apps on top of the single network, versus Bitcoin is seen more as a store of value and kind of doesn't have that same use case, at least today.
Absolutely. Is there any market tailwinds and market headwinds? So if you had to pick one for each that the audience should be aware about, that you guys are paying really close attention to, any elephant in the room or any exciting developments that investors should be made aware of, especially when it comes to Bitcoin and Ether?
I think we've spoken about the two things I mentioned earlier. And to me, number one is a friendlier approach by the regulators towards the industry over the next 12 months should be a really, really massive tailwind for the space. I think we're all looking forward to seeing that.
Absolutely. What about you, Michael? And I think it's a good question with what the audience were asking about where the price of Bitcoin is going from here. I know we cannot make precise, price predictions, but I think there are patterns that we can actually showcase to the audience. What is your take here?
Yeah, I think it's important to think about kind of 6 to 12 months ahead, what the rate environment we're going to be in is going to look like, right? Like it seems that the Fed is Fed Chairman Powell, it was fairly dovish in his speech on Wednesday. Obviously, they don't see kind of the same stress that the market seems to be pricing in for. That being said, too, it's possible we see a larger rate cut than expected, in which case, borrowing money will be cheaper. There will be more excess cash in the market. I think the long-term horizon here is looking quite positive. So continue to see what happens and how it unfolds.
Absolutely. Fantastic. And also for the audience, if you're curious about how 21Shares values Bitcoin and Ether, we have fantastic research on our website where you can find the various valuation frameworks to understand whether at current state Bitcoin is undervalued or overvalued based on historical patterns, but also based on fundamental valuation, looking at, for example, the cost of production for Bitcoin in order to understand how much it costs today to mine Bitcoin compared to the current price of Bitcoin. If there is actually an imbalance between the two and the cost of the mining Bitcoin is actually higher, there may be more selling pressure from the miners. So look into our research if you're curious about it at 21shares.com/US. You'll be able to find more research on that. If you're curious about portfolio allocation strategies and understanding the ideal allocation into Bitcoin and Ether, and what will be the impact on your returns or the Sharpe ratios, ratio, and other key metrics like the turnover ratio, we have also some research there as well. So after this call, you're going to receive all the different links. This session is recorded, and we're going to have the recording available on our YouTube channel. But I really want to thank Michael and Bart to be here and spending time with you guys. We have these webinars on a monthly basis. If you have any questions, feel free to reach out to us. Now you have faces on the 21Shares US team. So we're quite excited to be on the journey with you guys. And for the audience, thank you so much for your time as well, which is quite precious. So this is it for our existing session today. Unless we have any questions from the audience, feel free to drop them on the Q&A session. Otherwise, we're going to give you more minutes and hours of your time today.
Thank you, everyone.
Thanks for having me.
Thank you, everybody. Bye-bye. Thank you so much.